Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, August 3rd, 2022. Before I go over the reports and show everything, I want to go over just really our model, and this is going to really kind of help out both our existing customers as well as potential new customers. So, our predictive analytics model runs off of time, sentiment, and technicals. And what that really means is when, why, and where. So the when is when Woody gives us the time period that he's anticipating a reversal. He's one of the best market timers in the world. His dates work a lot more than they don't. But what happens is, even if he gives us a date, we need sentiment that's going to support the trend move. So if we're heading up, we're going to look at it, everybody being bullish on the market, and that will be the say confirmation that a turn is coming. And then we just simply use technicals to determine where it's going to take place. So the reason why sentiment is so important on this is because the majority is going to be on the wrong side of the trade 99% of the time. They're going to be selling at exact lows, and they're going to be buying at exact tops. It's just the way it works. And I'll go over some of the things. So this is our report, and this is from on June 14th, as you can see. Take a look at what sentiment was. This is when we had that big crash, 0% sentiment, 0%, 2%. So everybody was bearish on this market. Now, if we go down to my piece, what I was looking for was going to be a test of the 200-week moving average. That was 36.30, and that's where I was saying that I would be looking for to buy right here. So let's go to what took place, and here is the exact low. It went right at 36.40, and from there we saw the S&P rally almost 300 points in a matter of 10 days. Now, what could have you done with that? Well, here's the SPXL. This is the leveraged bull ETF, and this was when the low was. And let's just say for say just example purposes, you just bought 100 shares. So the 100 shares would have cost you $5,860. By the time it went, you would have had a gain of over $1,400 in just 10 days. Now, this is where we got short the market because we saw divergences playing out, and on top of that, we were running into the resistance. So one could have then bought the actual the SPXS, which is the short position on it. I mean, it's basically what it's doing. It's going inverse of the S. So this is what took place then. So here's the big drop. That's when we were actually long the SPXL. And from here, this is where we suggested that the market was going to drop at least 100 points. If you bought XBXS, here we're looking at a move going from just say here 23.93 up to 27.65. So again, just using if you're just using small amounts, you're up almost 30%, 40% on a $5,800 trade. And this is really the way this works. Knowing when we have both the long and short positions because of sentiment and technicals and time, we're able to make these types of trades. So if we take a look at what's going on now, this is the bulls they're in a major short squeeze. We're not chasing this right now. We're cash. We're actually waiting for the next move. And then from there, we're anticipating the drop to come down. It's probably going to be anywhere from 100 to 200 points. I think a test of the 4,000 level, even down to the 39.72 would make sense. So here you can see bearish divergences. That's what I said this was going to call. Fractal pattern, slightly higher high on it. And this is the resistance area where the same as this fractal pattern was. So the fractal patterns are not going to do it exactly. They're going to mimic it. And you can see this is our chop time. And this is why we believe that, or I believe, we're going to start seeing some big moves in both directions. And then eventually we're going to see that once everybody believes the low is in, we're going to see the market come down and most likely take out these lows. So that's pretty much how things are working. Now, if the bulls head up, we're looking at a move up to the 41.85. That's the next resistance, only 30 points ahead. If they get through this, I'm not saying, this is where we're shorting. We're going to see where things are. But if the bulls can get through this, then there's a chance that we're going to see a move come all the way up to the 4,300. So that's why we've been saying it's not a good time to be shorting this market unless you're making quick trades. And we didn't really, I didn't really see that playing out right now. And we just had a big move, and now we're just waiting patiently. We don't have to be in a trade every single day. We take these quick 300-point moves, 100-point moves, and then another 100-point move. We called all of these where it's more than the amount of points that the from the low to where we are right now. And that's the way we do it. I'd rather play things safe than anticipating that we're going to get a massive short squeeze. So that's about it. The Bears, they're going to need to get it through the 4074 to get any momentum going. And this is really the type of information. If you're not a member, what we do on a nightly basis, we also put out morning notes, and then on the reports, you're going to know exact time periods to be looking for this market to reverse. Now, getting back to this, I wanted to just go over this 100-point S&P guarantee. And we've run this before. I've yet to have anybody at request their money back because we've always did 100 points. We've actually done 200 and 300 points, but we just do it for that. And how it works is you subscribe to the 1 year special. That is 50% off our normal price. We put out buy and sell triggers. You can trade whatever you want, whether it be calls, puts on the spiders, or you do the XBXL, XBXS, and that the short, depending on which way we're looking. And after 90 days, if we didn't reach our 100-point guarantee, you can ask for a full refund, no questions asked. And the thing is, like, you don't have anything to lose on this. I mean, 100 S&P points, as I just showed you, it could be a 25% gain when looking at something like the XBXL. This right here is 300. That was this is almost a 40% gain. But let's just say 100. You're gonna make at least 10%. And if you continue to do that, your portfolio is gonna just grow and grow and grow, and that's all it is. And you make the same amount of money trades. So if you're not gonna sit there just because you're up three, four, $5,000, start extending it. You can, but you really want to keep things the same on it, maybe a little bit more. But this offers there's a limited enrollment period, and the reason why is once we start this, we can't just add people in because if they turn around and we've already made 75 points on the S&P and they're just starting, they're at zero. So this has to be something that starts and ends. It's going to be a limited period. I most likely I'm going to be going away tomorrow, so it most likely this will end on Monday. But take advantage of it. We've done it. Like I said, there's no risk to it because you're either going to make 100 in S&P points or you're going to get your money back. And and you're getting 50% off the normal thing. So take advantage of it. I think you're going to really love our reports and how we put them together, how our predictive analytics model works. And with that, have a great night, and I will talk to you guys tomorrow.